pleased to announce that we have with us here today Vilius Šapoka, the Minister of Finance for Lithuania, Joseph Cuschieri, CEO of Malta Financial Services Authority, and Harvesh Seegolam, CEO of the Financial Services Commission in Mauritius. So we're here to talk about using regulation as a competitive asset. Each of these gentlemen represent a country that is trying to position itself as a new fintech hub. And we're going to start by asking each of them to explain how they're positioning themselves and what their pitch is to fintech entrepreneurs. Let's start with you first, Minister.
Hello, everyone. So let me start by saying that it's a great honor to be here and have such a distinguished audience and panelists and moderator, of course. Sometimes it's very difficult to describe what are the main success factors. And I do believe that sometimes symbols are stronger than words. Let me explain our approach by providing you with a small role play. And dear moderator, just pretend and imagine that you are a new startup, you are a shareholder and a CEO at the same time. You have all relevant documents for a license. And now, what was in the past? You submit documents. Yeah, I put it aside. Just relax, wait and see. Maybe you'll change your mind. And what is current approach? I would take all those documents. I would submit to relevant divisions. If we have any questions, we will ask you again. And of course, we will inspire you and help you and give you a license and help you in your difficult work. So this is the main difference, and I call this strategy STIG. It should be easy to start, easy to technovate, easy to invest, and easy to grow. Each letter is very important. For example, S, start. We have newcomers program. It is one-stop shop for any company which wants to establish their office in Lithuania. Central bank officials help with compliance and any kind of other issues. Technovate. It's easy to technovate in a safe environment where cybersecurity, anti-money laundering, any kind of risks are covered by the state. It's easy to invest because you know that our profit tax is one of the lowest. If you invest into new technologies, for example, research and development, you can deduct 3 times your expenditure, etc., etc. And it's easy to grow where you know that the whole infrastructure is future ready, that regulatory environment is being reviewed on a constant basis. You know that your ecosystem is strong where all stakeholders can sit around the same table. So, and we are selling not a specific piece of legislation, we're selling the idea. And the idea is called STIG. Easy to start, easy to technovate, easy to invest, and easy to grow.
Great, thanks. One quick follow-up question before we move to Mauritius. You said easy to start. How much faster is it than other markets?
Currently, Lithuania is considered as the fastest licensing country, but not at the expense of the security, because the whole process was reviewed in order to seek efficiency and effectiveness of the supervisory system, and it allows us to issue a license, for example, for a payments institution in 3 months, for a bank in half a year. So basically it is based on the effectiveness and efficiency of the supervisor's process, which I explain by this role play.
Okay, thank you so much. So Harvesh, let's move to you. Mauritius is uniquely positioned towards Africa. Tell us how you're trying to leverage that.
Thank you, Jennifer. I think I'd like to join the minister in sharing that we are truly honored to be here at the Fintech Forum in Paris. To answer your question, basically, I'd like to just go back a little bit in understanding how Mauritius has contributed to the development of emerging markets so far. Over the last 3-4 decades, Mauritius has been playing a pivotal role in driving quality and productive investments in many emerging markets. And that has positioned Mauritius as a premier financial center for investments going into Africa and into Asia primarily. Now, building on this position that Mauritius has built over the decades, certainly we are working with the innovation that is happening in the sector. And as an innovative financial center, you cannot certainly turn a blind eye to what the phenomenon and disruption that fintech is bringing to the entire financial services spectrum. So it is with this in mind that in 2015, the government of Mauritius decided to embark on the fintech journey for the country. Now, in devising this fintech journey, there were 3 things that were fundamental for us to get it right. Number 1 was to create the enabling environment that would allow investors to do operations and conduct business in Mauritius. Number 2 is to introduce and ensure that the safeguards are in place so that we do not take any unnecessary risk or overexposure as we walk, the journey of fintech. And number 3, it was also about creating the correct capacity that will be able to accompany the regulators and operators in this journey. And here I'm referring to resources primarily, human resources. So these were the 3 main limbs, I would say, of our fintech strategy. And certainly, given our strategic positioning and given the realities of Africa and other emerging markets in Asia, where financial inclusion is necessary, access to finance is necessary, we say that the positioning of Mauritius has to be on its forte already as a financial services center by allowing fintech operators and service providers to use Mauritius as their base to access the region primarily. Now, when it comes to creating the environment for accompanying, investors into this journey, we have done a lot already, and we continue to do a lot. And by this, I mean in terms of regulations, we have been at the forefront by introducing a number of new licenses. For example, Mauritius is the first country to have introduced a custody license for digital assets. And this entire thought process was done together with the OECD and many other regulators. We have also been putting a lot of emphasis on the doing business environment, and this is testified by the fact that Mauritius is ranked by the World Bank as the 13th easiest place to do business in the world. That is last year's ranking, basically. So the ecosystem to accompany operators is there. When it comes to resources, we're working very closely with counterpart regulators and international bodies in providing training in the field of fintech and blockchain, primarily, to regulators and to private sector operators. And here again, last year only, we launched what we call a regional center of excellence in Mauritius in collaboration with the OECD to actually deliver on this strategy. So these are things, I would say, that we've embarked on already, but primarily the plan is to position Mauritius as the fintech base for the region.
Thank you very much. And let's move to you now, Joe. So tell us what you think is Malta's edge.
Okay. I think we need to emulate Lithuania. We need to be quicker in giving out licenses. So I would be happy to learn how you do it in Lithuania. And also, obviously, I also like to learn from my colleagues from other jurisdictions. There are two facets to what we're doing. First of all, Malta has been a financial services center for the last 25 years. So we established ourselves and we established the single regulator in 1994. So the MFSA is the single financial services regulator in Malta. And there are two things which we did when it comes to fintech in general. There were two bodies of legislation which were passed through our parliament in 2018. There was the Virtual Financial Assets Act, and there was the establishment of the Digital Innovation Authority, which is essentially the authority which regulates blockchain technology. And there were two objectives there. Number one, giving legal certainty to an unregulated economic activity, because obviously blockchain is an activity which is carried out worldwide. The technology is being applied in many facets of economic activity. Cryptocurrencies started to kind of take center stage. There was a lot of talk about them. There are also the risk aspect of it. There are certain jurisdictions which don't allow them. But now we're seeing that change. So now we're seeing also the debate shifting at European level, with the European Central Bank looking at that currency to see how best to address it, how best banks can address, and deal with fintechs, for example, and technological innovation. So there were those two bodies of legislation. And essentially what we did on the crypto space is that we created a framework for licensing, and the MFSA gave 1 year grandfathering period, so that a transitory period, so that whoever was operating in the crypto space will have a year to regularize themselves, notify the authority, and also then eventually apply for a license. If you don't apply for a license, you have to leave the jurisdiction. And there we have put quite stringent, I would say, AML requirements, consumer protection, and the rest of the rule book essentially protects also the financial stability, the integrity of the system, and the whole consumer awareness issues around it. But we also created, for example, the concept of VFA agents. So CSPs who want to operate in that space and who want to service customers in the fintech area or the crypto area need to get a special license for them to be able to interact with the MFSA. Okay, when it comes to bringing licenses or applications on behalf of their customers. We have licensed 19 VFA agents, and we have right now 34 applications for most of them crypto exchanges and some other crypto activities. But our fintech strategy is not about crypto. Crypto is just one strand of it. What we're trying to do is we want to create an ecosystem where you have clarity, where you have good, robust regulation, where you build partnerships, it's also with other jurisdictions, with the private sector, access to finance, the technology, the innovation ability, the infrastructure. So these are all things which are happening as we speak. Our strategy sits on 6 pillars. And we are promoting Malta also in general as a place where there is ease to do business, a country which has its economy, 85% of it based on services activity rather than manufacturing. We have very strong ICT infrastructure. We've got a very strong online gaming sector. And our economy there's a lot of digitization going on across the board with the public sector and the private sector. So Malta is an innovative jurisdiction, is very business friendly, but also welcomes the craziest of ideas from an innovation perspective, to come to Malta and to try out new technologies. We are small, we are nimble, so it's very easy to test out new technologies. Some of the largest groups in Malta, and I mentioned, for example, Vodafone, way back in 1988, when mobile technology was very limited. Vodafone was established in the UK originally, and Malta was their first foreign jurisdiction what was the first operating model which was tested out before Vodafone obviously became a global operator. So Malta was a test bed, and it worked out. And there are many other companies who actually do that kind of thing because we're small, and it's very easy to test out new technologies on a nationwide basis.
Thank you. So, with Brexit on the horizon, do you think you might benefit from some fintechs deciding to come to your country rather than the UK? And how do you feel like you can compete? What is your specific advantage over the established hubs like London?
Yes. So talking about Brexit, of course, I do believe that our common goal should be to preserve London as the major European financial center, because it's about a global competition. And we see City of London as our one of the best partners in that area. And talking about investor base, so in Lithuania, it's not just UK companies, so the spectrum is very wide from Israel, London, Singapore, and many other countries. Therefore, I would say that in this uncertain environment due to Brexit, of course, it's very important to keep business models. Maybe we can help the City of London not to compete, but to have mutually beneficial relations. So, of course, now we see London as our major competitor in the area of fintech companies, because at least in Europe, Lithuania is #2 and the UK is #1. But I do believe that fintech area has so much potential that each major financial center can benefit from that process.
Havesh?
I think where we stand as Mauritius, we see Brexit from a different angle altogether, and that's explained by the fact that we are not a European country. We are actually an African country. What we are noticing is that over the last couple of years now, momentum is building by a number of UK established firms to look into the possibility of diversifying their portfolios of clients. And this is a diversification that is going beyond Europe. They're looking at emerging markets, they're looking at new territories, they're looking at new opportunities. And this is where Africa becomes strategic in their way forward. And when they think about Africa, they tend to think about Mauritius as being their ideal partner to accompany them in that journey into Africa. And it is from this angle that we're looking at Brexit. How is it that we can further accompany UK firms that are actually looking at diversifying their portfolios into emerging markets, primarily into the rest of Africa, so that we can accompany them in the process. In so doing, we're working very closely with our counterparts in the UK in terms of ensuring that we do have the same understanding and the same understanding of their business model that these UK firms have been adopting and have been operating on. Yeah.
Well, I'd like to come back to this idea of global cooperation, but before moving to Joe, I just did want to mention about the huge potential in the African market in serving the unbanked, and also point out that although Africa was really pioneered the payments model with M-Pesa, that the current market is really fragmented. And so coming up with an approach that works across, within countries and cross-border is still a huge opportunity for fintechs. And I do believe that you are starting to see some B2B companies and also some payment integration systems being attracted to come to the Mauritius market.
Exactly, because when you look at the need for Africa right now, you rightly said it's underbanked. There's a need for financial inclusion, and there's a growing base of SMEs and new entrepreneurs that are building up basically in Africa who are in dire need of financing for their projects. So this is what we've been thinking about, and this is what we have laid down, the enabling environment that I was referring to initially, in putting in place the right regulatory approach and framework to accompany, for example, P2B lending firms into accessing African market, in accompanying payment service providers, in accompanying new platforms in the fintech space to provide financial services into many of these emerging markets. And we're seeing a lot of traction lately into that.
Okay, thank you. Joe, so how are you trying to position yourself against the UK market?
Well, the UK market, I admire the UK market, but what the UK have done, I think the UK is the largest financial services center in the world, and I think it will remain to be so even in a post-Brexit scenario. I think the question is, and for me also to be able to answer that question better, I think there's a lot of uncertainty around that. I think for a country like Malta, we follow what is happening in the UK, particularly on the innovation side and on the fintech side. They've done a lot. And there are only learnings that one can take from that. We are doing a lot ourselves as well in creating the ecosystem and in creating the regulatory environment to give legal certainty and a transparent approach. I think it all remains, I think the crux of all this is what sort of rules will the UK manage to carve out with the European Union for fintechs in the UK to be able to operate freely in the European market. I think, Harvesh mentioned this point earlier. The UK have, the Commonwealth countries who could be, countries with whom they can trade. Other jurisdictions, the US, Africa, etc., Asia. But in Europe, it's very difficult to answer that question, I think, because it depends on how the freedom of goods and services is going to be negotiated. In a post-Brexit scenario. Now, on 31st January, the UK is obviously out of the European Union, but there are still 11 months of negotiations. But of course, Malta from a Brexit perspective, Malta has benefited because over the last 3 years since Brexit was announced following the referendum, we've had lots of insurance companies, for example, who needed a foothold. So the UK insurance companies who need a foothold in Europe, they were coming to Malta. Other financial institutions, wealth management. Those are all areas, and Malta promoted itself as a co-location. So we're not saying, listen to British firms, no, come to Malta, and no, you can operate in the UK, have a license in the UK, but Malta can be your gateway to Europe. And that has been our approach.
And is it fair to say that, like, as a smaller country, that you sometimes have to be a little bit edgier by focusing on new things like cryptocurrency? Is that a fair statement?
It is a fair statement because Malta's system is relatively simple. So we have one parliament. So once a law passes through our parliament, it gets implemented immediately. There are jurisdictions where there are other stages, to have a law being enacted and implemented. So being small can give you an edge. You can be more agile, more nimble, I would say.
Okay, great. So let's spend a couple minutes talking about the cryptocurrency opportunity, because I think it was just last week that Mauritius Central Bank announced that it was going to launch a central bank digital currency. And what we're hearing is that as banks around the world start doing this, they are going to be looking to forge public-private partnerships to help them get this domestic digital currency out into the market. So who would like to kind of address what they see as the opportunity there?
I can start. So talking about digital assets, of course, for countries which have their own currency, it's easier for very obvious reasons, because Lithuania is in the euro area, and of course the European Central Bank is the one who has emission power, exceptional power. But of course, talking about the future, digital government assets can be a step forward to have stable coins. But of course, it will take time. But looking from macro perspective at the global level, of course, it can reduce transaction costs quite considerably. And it indeed can have quite a huge additional impetus for the growth. But of course, discussions are at a very early stage, inspired by the way, by Libra. But I do believe that if we are quite cautious and quite balanced, the approach of stable coin can indeed reduce transaction costs and even have a positive impact on macroeconomic level.
So I think that Libra certainly, put this to the top of the agenda of governments because they don't want to lose their sovereignty to a single powerful private sector player. It looks increasingly likely that we will have many different governments around the world launching this first domestically in partnership with a whole variety of private sector players. So we are likely to have more rather than less competition, I think. What do you think, Harish?
I think, again, I'd like to support the views that the Minister has just made here, because we're still at the very nascent stage. We're still at the very lower end of the learning curve that we're all embarking on. And as an innovative jurisdiction, certainly Mauritius has announced last week, that we're introducing a digital currency at the level of the Bank of Mauritius. And it is really in line with our strategy about having a control on risk, having better efficiency, and having more competitiveness in terms of cost, basically. But for this to work and to be a success, definitely there is a need for collaboration at the domestic level with the distribution network, basically. And here I'm referring primarily to banks. Unless and until you have their support, basically, you will not be able, commercial banks, basically, you won't be able to deliver on that. And then at a later stage, certainly going cross-border. I do not necessarily see it as being a competition, per se, because what we're talking about is digitalizing the national currency of the country. So it is just digitalizing our own currency. Certainly in bigger blocks it makes it a bit difficult, as in the case of Europe, but Mauritius being the fact that we have the Mauritian rupee for us, and you have many other countries that have already announced the same, it makes it a little bit easier in terms of leniency for us to be able to make it happen and test it going forward.
Okay, and so Joe, let's talk about what does the adoption of national digital currencies mean for a country like yours, and then let's jump into a conversation about why cooperation between regulators is necessary. The previous panel, one of the panelists said, we absolutely need like a pan-European policy, et cetera. So, please.
Thank you for the question, Jennifer. First of all, Malta didn't yet introduced a national digital currency. So what we have done is essentially put together a framework to regulate what we are calling virtual financial assets, right? Which is cryptocurrency, essentially. And what we did there was creating a framework which gives legal certainty and also approaches a sector which is viewed by a number of jurisdictions, even we see it as has its risks, with a certain degree of caution. So the government of Malta took, in my opinion, a very bold move in creating a blockchain framework and the virtual financial assets framework. And that was to position Malta as an innovator and a forward-looking thinker in terms of these types of economic activities, innovative activities. And that has generated, I would say, a certain degree of debate. It also put Malta on the map as a fintech center. But at the same time, it's one of those things where you need to promote that framework, but at the same time, you have to do it with caution. Because it's an area that we don't know everything about it. We are still learning about it. It has its risks. I mean, we read, like, in the Financial Times and other international journals, some scams which take place, and maybe also financial crime using crypto vehicles. So that spurred us to put together a framework which is very robust. In fact, in our jurisdiction, we are often criticized because the framework is quite onerous from a consumer protection perspective, from an AML perspective. For example, the requirements we have put into the framework go beyond the 5th AML requirements. The financial stability, the financial soundness requirements, the initial capital that you need to set up shop are quite onerous. So we've received some criticism on that. But with all the stakeholders, we are seeing how best to make it work at the end of the day. We have, so far, as I said earlier, we've got 19 VFA agents who applied. These would be firms of lawyers and accountants who will be providing services in that space. And we have 34 applications, 21 of them which are for crypto exchanges. Okay, those are being processed as we speak. The amount seems low. And I was criticized in the media as well that, there was a lot of hype and now the amounts are low. But I'm fine with that. We are in no rush. I believe we are on the map, but we need to be careful and take bold steps forward with the right thinking, with the right approach. And that brings me also to the cooperation. We need to learn from other jurisdictions because it's an area which is innovative. There are still learnings. It's a journey that we have started. But I believe that now, crypto, unless it becomes a mainstream activity, or it has, for example, a pan-European regulation or global standards or minimum set of standards, it will always remain, localized. It will always remain jurisdictional because obviously on the respective frameworks within the jurisdiction. And it's also encouraging now to see, for example, the European Central Bank starting to consult on how banks should deal with crypto activities, And I believe that in the next, the coming years, within the next 5 years, I think there will be some sort of at least a pan-European regulation. Not sure whether it will be an international regulation, but I think on a European level there will be a regulatory framework regulating.
Thank you. So now let me turn to the Minister and Harvesh, and let's get your perspective on, as the global fintech market evolves, what do regulators need to do together to ensure there's a common understanding, common framework, common standards, so that the whole market can thrive?
So let me put you into a broader picture, not helicopter view, not a plane view, maybe cosmic view. So when the world is spinning so fast, do we have any mathematicians here? Okay, let's pretend that you are mathematicians. So basically, if you want to manage a chaos, so the best system to manage chaos is democracy, because it's a responsive system, it's a balanced system. With this kind of a system, you can avoid any unintended butterfly effect. And in this case, when you think that the system is evolving in a chaotic way, you should remind yourself what are the main features of democracy: consensus, cooperation, listening to others. And I think that is a clear road for developing regulatory framework in the fintech area as well. if you just want to be very quick and you see to the system as a linear system, you'll fail. If you want to make democracy very quick, you'll fail. Therefore, I don't believe into the approach that, okay, let's make the European Union institutions very quick. Let's make G20 very quick. In democratic world, it doesn't work like this. Therefore, we should put a lot of efforts into engaging all kinds of stakeholders and trying to find a consensus. And only in this way we can manage the world of fintech, which is chaotic.
Thank you. Harvesh, would you like to add?
Certainly. I think the way I see it is if we are to look at us as regulators, what are our duties, it can be broadly summarized within three main areas. One is certainly to protect the consumers. Second would be to safeguard the country and the good repute of the jurisdiction. And third would be to ensure that there are no financial illicit activities and crimes, like Joseph was mentioning earlier on, be it in terms of money laundering or terrorism financing, basically, that is taking place. Now, when we talk about fintech, these are certainly high-risk areas, basically, given the speed at which things are moving. But at the same time, the advantage is that it leaves behind it a lot of traceability and accountability into the system. But also taking into consideration the cross-border nature of most of the fintech activities that are taking place in the world nowadays, I think it's essential for all regulators to put their heads together and to adapt to a common approach and understanding of the licensees and regulators that are actually operating within their own jurisdictions. And this cannot happen if there is no collaboration and cooperation between regulators. At the level of the Commission in Mauritius, we have started collaborating a lot with our international counterparts in fintech areas. Last year, we signed an MOU between Malta and Mauritius. Again, last year, I signed an MOU with the AMF here, Autorité des Marchés Financiers, in France, and a number of other jurisdictions are there. We are also part of the GIFIN network, which is the Global Financial Innovation Network, which I think we're all part members of, basically. It's a group of 32 like-minded regulators in the world, spearheaded by the FCA in the UK, which we're trying to have a common understanding and develop common standards in the way we are looking at the evolution of fintech activities. So unless and until we have this common understanding, we will not reach far. And this is a very, very important, fundamental, and essential.
Okay, thank you. So I think that it is clear that all three countries, in their own way, are trying to find the right balance between being very open to innovation and friendly to fintechs, while at the same time fulfilling your obligation to safeguard the population and make sure that criminal activity does not flourish. So with just like a minute and a half to go, I want each of you to just leave the audience with one thought about why they should set up in your country.
So if you want to be number one, of course you should switch on to top gear. And so can you be secure and quick at the same time? Yes, you can. A plane is a perfect example of that. So if you want to fly high, so come to Lithuania.
Okay, thanks. Harvesh.
I think I'll just summarize in saying that if you want to access the global markets, establish locally in Mauritius.
Okay. Thank you. And Joe?
Malta is your gateway to Europe, first and foremost, but also gateway to the world. We are innovative, we are quick, and we welcome business and innovative ideas.
Great. And with that, I'd like to ask the audience to give a nice round of applause for our panelists. Thank you very much.